Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about FIT HON TENG interim report. FIT HON TENG Limited offers a diverse range of businesses and services across various industries. Some of the key areas include manufacturing and sales of mobile and wireless devices and connectors, production of electronic and optoelectronic connectors, antennas, acoustic components, and cables and modules development and sale of interconnect solutions and related products, sale of consumer electronics and connectivity solutions, warehousing, distribution and sale activities, design, development, manufacture, and sale of automobile and household appliance components, provision of technology consulting services, manufacture and supply of electronic and electrical components, auxiliary equipment, and motor vehicle parts. The company operates under two main segments: intermediate products and consumer products. Its products are sold under the Belkin and Volterra brands. FIT HON TENG's stock price skyrockets. Key drivers revealed in the past year. FIT HON TENG's stock price has surged by an impressive 162.55%, driven by several significant developments. The company's strategic expansion into new energy and EV charging through a joint venture with Foxconn Interconnect Technology has been a major contributor to this growth. Additionally, advancements in AI technology and data center connectivity showcased at the OCP Global Summit 2024 have aligned with market trends, generating positive sentiment towards FIT HON TENG's forward-looking initiatives. The company's 3+3 strategy performance, which includes accelerated production of cloud and AI server products and AirPods, has also been a key factor in its stock price appreciation. Furthermore, positive analyst ratings and outlook from Huatai Research, who upgraded FIT HON TENG to buy with a price target of HK $3.02, have further boosted investor confidence. The increased iPhone production requests from Apple, which positively impacted Apple's supply chain stocks, including FIT HON TENG, has also contributed to the company's substantial stock price appreciation. These developments collectively fostered a bullish sentiment around FIT HON TENG, resulting in exceptional returns of 205.69% over the trailing 12 months as of September 26, 2025. The primary drivers of revenue growth or decline are largely influenced by emerging technologies and shifting market trends. On the growth side, cloud end markets, automobility, and electric vehicles, EVs, with autonomous driving technology have been significant contributors. The increasing demand for high-quality wiring harness products in EVs, integration of EVs with autonomous driving technology, and the development of 5G, AIoT, acoustics, and automobility end markets are also key drivers. In contrast, revenue decline is driven by factors such as uncertainties in the general environment, tariff situations, inflation's impact on smartphone demand, and conservative corporate and consumer spending due to economic uncertainty. The decline of smartphone component products and system products end market have also contributed to the decrease in revenue. The company's financial performance indicates a strong ability to generate cash from its core operations. According to the provided summary, the net cash generated from operating activities totals $118 million. This significant amount of positive operating cash flow suggests that the company is efficiently managing its resources and generating sufficient revenue to cover its expenses. As a result, it can be concluded that the company is indeed generating positive operating cash flow. The company's debt level has experienced a notable increase. Between December 31, 2024 and June 30, 2025, the total debt rose by 6.8% to $3,182,084, while bank borrowings increased by 18.6%. This significant rise in debt is likely to impact interest expenses, which may be influenced by both the increase in bank borrowings and changes in the weighted average interest rate. However, interest paid actually decreased from $40,022 to $37,996 during this period, suggesting a potential discrepancy between rising debt levels and corresponding interest expenses. The financial performance of the company varied across different segments and regions in 2025 compared to 2024. In terms of segments, intermediate products, cloud, consumer interconnects, and automobility performed well with significant revenue increases. On the other hand, system products and smartphones showed declines in revenue. Geographically, the PRC and Singapore were standout performers, experiencing substantial growth in revenue. However, the United States of America, Hong Kong, and Germany witnessed decreases in revenue, indicating a decline in their market share or performance. Management is optimistic about the company's outlook, driven by rapid technical development in the global connector industry, particularly with AI applications. The company will focus on three major trends: energy efficiency, power conversion efficiency, and open standard platforms in data centers. To capitalize on emerging market opportunities, management plans to expand its presence globally through innovative connectors that meet customer demands. The high-end smartphone market is expected to remain positive despite the decline in overall demand for smartphones. The company has made strategic moves to strengthen its position in automotive electrification through the acquisition of Autocable Group and a partnership with Hunhai Group. This will enable it to capture new opportunities in the future automotive electronics market. Management also plans to establish new production complexes to meet customers' globalization expectations, upgrading existing facilities to maintain competitiveness. Overall, the company is poised for growth driven by technological advancements, emerging markets, and strategic partnerships. The company has made notable transactions in recent years. Notably, it acquired Autocable Group in Germany in 2024. On the other hand, the company divested assets worth $6,231 for the 6 months ended June 30, 2025. These acquisitions and divestitures reflect the company's strategic efforts to expand its operations and optimize its portfolio. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights two pressing concerns that warrant attention. Firstly, there is a notable increase in inventory levels from $904 million to $989 million on page 12, indicating a buildup of unsold products. This trend raises questions about the company's sales projections and potential losses due to excess stock. Furthermore, supply chain disruptions are also a concern. The upstream supply chain for system products experienced interruptions on multiple occasions, pages 6 and 10, which could impact production and delivery schedules. Additionally, the fact that intermediate and consumer products are mainly manufactured in countries like PRC and Vietnam, page 33, may pose potential risks due to geopolitical or economic uncertainties. These concerns underscore the need for the company to reassess its inventory management strategies and supply chain resilience to mitigate these risks and ensure business continuity. That concludes the financial summary for FIT HON TENG. Feel free to comment below, and I will be happy to answer them when possible.